following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Couple of issues, and I cannot get into their links. So, I'll tell you what we're going to do is I was speaking earlier. I don't know if you were hearing me. I had a really good trip down to Colombia, South America. Got a lot of things done with a good friend of mine, Juan Villegas, down there. And Juan Estrada, one of his really, really good compadres, assistants, just one of the smartest guys you want to meet. He got a graduate in physics degree, and it's real lucky for us to be able to work with him. Comes a very, very good programmer to boot. So one of the things I want to talk about first of all, since we can't go through our charts yet, what I'm going to do is I'm going to pull up the S&Ps. Had a little bit of reversal on yesterday's afternoon trade. We're trading 1852 right now. This 1909 has been a big number now. If you look at our daily situation, you can't look at it. I'm just take it at face value that we're looking at it. 1852 right now. That 1909 is a big number now on the daily unfair lows, which we've kind of rallied up, kissed, used as resistance. And remember, with the breadth situation the way it is, and I'm going to go back to my scanner and look at my dashboard. We had our 60-minute crossover actually to positive yesterday and hold. So that's the first hint in a while of something happening on the north side. Last time we had our crossover on the 60-minute to go positive was around January 14th, and it only happened for just a little while. So right now, you've gone positive, you've held. Right now, this morning, we are down on the S&Ps about 3 points. So I expect yesterday's breadth being positive to still be positive on the opening here. So short-term guys on the 240s, your targets on this type of trade are 1891. And why is that? If our short-term stays positive, there will be a possibility of a trend, a contra-trend trade on that type of mechanism alone, and we're looking at 1891 as the targets on the upside for that, and ultimately that 1909. Now, those are pretty serious resistance areas. Why? Because as we look at our breadth stays negative in the long term. We're still supposed to be selling resistance when it's offered. The only time I'd start really feeling bullish about this in a big way was if our breadth starts rolling to positive, at least on our daily. That means the internals of the S&P 500 are in a state of imbalance mostly towards the north side. And that's what we want to see is, this is a non-weighted calculation, and we want to really clarify what are the internals in a kind of in a pack mode saying to us. So that's the situation on the S&Ps. The treasuries, we're going to go into that really quick because, the other day we talked about catching a possible resistance trade off of 128, 27, 28. That actually worked out quite well. But all we did was meet targets down below at 128.01. And if I can't, let me see if I can finally get my charts up here and get into the den. Let me just see if that's available. No, it's not. Okay. So the visuals on this have been coming off of 128, 27, 28 and going back down in and meeting support at 128.01. Now the bonds at this stage right now are trading 129.0102 on the 10-year. Excuse me, these are the notes. I'm sorry, I said bonds. 128, 27, 28 now is that big number that we're going to have to stay above or below today. I personally feel like these notes are going to relax a little bit and come back down below 128.27. I still think they should have acted even crazier on the north side. And this has obviously been a great rally to take advantage of on the notes. I haven't been as bullish on notes lately because of the relative, the relative strength not really being there for the most part as this market takes a pretty serious dive down and some historic epic moves. This 10-year really, in my opinion, should have gone much higher. So I'm looking for this. The net result of what I'm saying is I'm looking for this to get back down below 128, 27, 28. Let's just call it 128, 28. I'm looking for this to get back down below there. I'm looking for the stock market to rise a little bit. And I'm looking for these nodes to kind of relax back into this long-term balanced area and retest 128.01. All right. So one of the things I also want to mention today is we're going to look at the Shanghai, and we are at some pretty serious new profile support right now around 2880. If the Shanghai can catch a bid off of this particular level, we could easily see that 3000 area again very, very quick. I understand what you understand, which is there's not a lot of good news coming out of China right now. But remember, we haven't even explored this fair auction really up into 3030, 3079 up in that area. So we could have a little bit of a bounce here in the Shanghai. And if we get back above 3000, that would be very, very bullish for the Shanghai to start actually trying to get back into 3,300. Is that going to happen? Is the government going to come in and develop some new measures and put those into action? It remains to be seen. But right now we're sitting at support on the Shanghai. Tell you what, guys, we're going to go to break. A little discombobulated this morning without my hotcom going, but we're going to try to get that going and get you some charts after this next break. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Thanks for bearing with some of the technical issues this morning. The Hotcom Tiger's Den should be up in a little bit here. They're working on it. And I guess we should call Al Gore the guy who invented the internet. Just get Al Gore on the phone and he'll fix everything. So just remember, he's always there for you. Let's take a look at gold. And as we look at what's happening in gold, we've talked a lot about this 1104 general area, and that has held again. I mean, we've come up into it, we've come off. I really like how this is acting on the short side to be able to sell rallies. I think it should be a lot higher on a relative strength type situation relative to what the market's doing. It's a kind of an inflationary tool, and obviously the globe is in a deflationary spiral, death spiral, because of this crude oil. So should this be higher? In my opinion, it should be a lot higher, just from a kind of a fear factor state. I mean, throwing out the inflation thing, it's just not looking that well. I mean, I don't know how else to say it. I mean, I probably should have used a better adjective there than well, but it's something that I feel extreme comfort in shorting and putting stops in a kind of relaxed manner above that 1104 area and just see if we can fall apart down to 1060 again. Looking at silver, we talked about this, the relative weakness of silver. It's still stuck in the mud, and I still think you should be selling breakdowns below 14 and selling resistance at 1442. And there's a huge lid around 1514, but that's just miles away from here, so we're not even going to talk about that. Let's take a look at crude oil. All right. Okay. So we've looked at the scanner a lot. I was in a bank down in Colombia 2 days ago, right before I left. And, these guys, where they were asking about crude oil, they were asking about this and that. And I said, look, I just can't stress enough that if you're going to trade these things, at least get some hints of some changes in atmosphere and attitude. And crude oil, they were like, oh, God, we got to buy this thing. It's 29. And I was like, you really don't have any reasons to do that yet. And as I look at crude oil, and I'm pulling up our crude oil chart, I don't see any huge reasons to start backing up the truck on crude oil yet. I mean, the real serious indications would be, and I'm just going to pull up our daily here. The real serious indications would be getting back. The 240s have been a great regulator of this trade down. I mean, you got a little bit of an area to play around with here around 27, 83, 84. But until we get back above 29, I don't see a huge 28 and a half, 29. I don't see a huge reason to start playing around with this except on a tight stop level and being able to play around with that on a short-term basis, being able to play around with it. As soon as I can get my chart to come up here, this 27.84 area. Remember this, with all the fundamental things going on and the supply factors that are out there, you got a lot of people that are sitting with this particular product going, wow, when did I ever think I could pick up crude oil at 27, 28, 29? Well, that thought process, if you just magnify that, there's a lot of folks out there that are putting stops in because they more than likely don't want to take too much heat if they've tried this already. So it's kind of a self-fulfilling prophecy. People nibble, the large players are out there selling, people nibble, and they have to actually cover. So it's almost like trying to short. Remember back in the year 1999 or 2000, trying to short some of these internet stocks, the Yahoos of the world, the Qualcomms of the world, the SanDisk, all the usual suspects back then that were just completely on fire. And when those people short it, it's got a big short interest because it doesn't make sense. I mean, they have to cover. So a lot of these things are possibly in play here on crude oil. So just remember that. Let's let it break some profiles on the way north here, and then we'll kind of reassess things. What I'm going to do now is I'm going to go back to my charts here. All right. On natural gas. And we're looking at the February contract on natural gas. As we look at the long term, you have a pretty serious lid on this thing around 2.303. Let's round it off, 2.30. So you've also got some daily unfair lows around 2.265. So in that general DMZ between 2.26, 2.27, and 2.30, in my opinion, you can't really play around with this until we rally back up into that resistance area. For those out there trading natural gas, and just put stops above, and this is kind of something I think that could considerably fall apart again and just kind of settle below 2 and stay below 2 for a while. I know that's something you guys probably don't want to hear if you're long natural gas, but I'm still looking to sell resistance, and we've been looking to sell resistance on this thing literally forever. It definitely broke stride when it started climbing above 2 lately, but there have been some reasons to short it lately, and I'm going to kind of stick with the long-term trend down that we're still in a balanced area on our weekly, and the top of that balanced area is around 2.303. We're going to hit the XLY. This has been something I was just so happy to see this thing come apart at the seams finally. This is one where we talked about making 10 points on from around 80.5 to 81.5. That's happened. We actually hit a low this week of 69.94. That was a little bit even lower than I thought was going to happen. But let's see what's driving this thing. AMZN. Let me ask a question. Who knows what the symbol AMZN stands for? Amazon. All right. So Amazon finally broke this 605.44 area. So what is that now? That's former support, now resistance. So we're looking for rallies back into 605, 605 and 609 are the big numbers. You've got another number sitting at 591, so you can look at 591 as getting back above there to trade maybe a 15-point ride up to 605, 609. I think Amazon, without question, has broken down here on the long term. But remember, this is a stock that a lot of people were trying to get in on the short side. They don't make a lot of money, if any. And there's still some shorts in the stock. So beware of rallies back up into 605, 609 in this before we could start using the former support, now resistance. I think the market in general is due a pop. This has been a kind of a strong stock in a weak market. A relatively strong stock. I mean, it's not the best strong stock out there in the world, but just beware of a pop in this, but you've got another chance to get on some shorts. 605, 609. I can't say that more times than I've already said it. All right, let's take a look at the dollar. Dollar, love it. Love it going into 170. Love it still putting stops below 98.30, that general area. I know that's a big safe landing area. You guys who are trading short term, you're more than likely going to have to look at this. Stops around 99 and below. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And let me check HotCom one more time. See if we can get the DIN going. We cannot. That's okay. I'm looking at the Nikkei right now. And, you know, obviously a lot of news out coming out of Asia all the time. And the Nikkei's just been getting just its head bashed in. I don't know any other way to see it. 18,475 was that big breakdown point. That's actually when our breadth turned negative too on the long term on the Nikkei. It actually turned negative before that breakdown. And that's why looking at the breadth situation on the long term is so critical. I mean, I even fought it. I'll just admit this. I fought it a little bit on the way down because I was looking at the U.S. markets, talking about U.S. market breadth on the S&Ps. We had turned negative right last week of December, first day of the year. And, I looked at the market, U.S. markets, as kind of holding up on a relative strength scale, and it still is relative to what's going on in the rest of the market. So, you want to try to find strong stocks in a weak market. And this time I was looking at, this is a strong index and a bunch of weak indexes or weak indices. But the breadth rolled over on the S&Ps, and, I was a little hesitant because of that relative strength situation. But if you look, just look at it at face value, turn the wrench the same way. Our weekly and dailies have been negative, and they haven't even started showing any hints of changing. We do have our 60-minute on our S&P breadth start to go positive right now, and that happened yesterday. So that's a little popish, if that's a word, that the S&Ps could do a little bit of a contra trend move up right now. But some of these Asian indices, I mean, they just don't have a lot of hope. I mean, the breadth and the internals of these particular markets are staying relatively negative. And, it's just amazing to watch that. Again, good news out of China, or not like the economy's turning, but some kind of new fixing measure would obviously be a relief mentally for a lot of these folks who are in these markets, and it could turn things. I want to look at one more thing that's pretty near and dear to my heart. The soybean trade. A lot of people have called. We've got a new inside profile going on the March bean crop, on the March bean situation contract. So what do you do now? This is kind of causing a little bit of a breakout mentality. So you got a new range that's tightened up. That range is 884, 885 down into 866. So I'm looking to not trade the range because it's relatively tight, and we kind of have pinched in on boxes here or on profiles. I'm looking to trade breakouts when it comes to that, and I'm looking for breakouts on a closing basis. Had a couple of emails about that. I have no idea which way beans are going to go here because I've been relatively bearish on them forever. But breakout on the upside, we could see 910 again. Breakout on the downside, we could see 854. It's not a trade that you're going to retire on, but it is what it is. Let's take a look at the XLF. What the deal is here is that 22 rounded off area was the breakdown point on it. I'm sure that a lot of these banks are kind of rolling their eyes in the back of their head, just, oh my God, the yield curve is flattening. I actually don't think that that's going to be the case forever here. So I'm looking at the XLF not as a really serious shorting opportunity. I'm looking at a go long opportunity back above 2193. I'm going to pull up a couple of banking stocks here and just kind of go through the motions with those. Very similar charts to the XLF. JP Morgan, the breakdown of 59.22, would have to get back above there to start feeling rosy about going long the stock. I'm going to look at Wells Fargo, my favorite bank. Can we do a Wayne's World comment here? I have to say not after I say that. Was that 80s or 90s when that show was on the I guess it was the 90s on Saturday Night Live. Anyway, Wells Fargo, not a less of a rosy situation here, and this is one you want to stay away from. Goldman Sachs, you don't even want to try to mess around with Wells Fargo on the long side. Goldman Sachs, obviously this has been in the news. It actually has been a weaker banking stock, or financial stock on a relative strength scale, and we're trading 153 right now. So what do you do with this thing? So new profile appeared yesterday, locked in. You want to mess around with this, you've got to get back above 155.38, and unfortunately your only targets here are 160. So you got about a 5-point ride there maybe, And lofty aspirations would be, hold on, guys. Something just came on here that it wasn't supposed to. Lofty aspirations would be 175.60. What the? 175.60, and that's the upper limits for the possibilities of Goldman Sachs. And again, I apologize. Somebody is over here starting TFNN on another computer. TFNN's so popular, we have it on multiple machines here. Short-term binary options. Excuse me, guys. We're having some technical issues on my side here. All right. Okay, so back in action here. Apologize for that. Tell you what we're going to do. We're going to pull up our scanner really quick. And we're going to go into our currency section. And we're going to talk a little bit about the euro here. So as we look at the euro, we've always talked about this 109 area being a big, big lid, a big area of concern. I'm still sticking by that. Why is that? That's our weekly unfair lows, and right now we're trading, it looks like slightly below there. I'm going to go to our 1 hour and just verify that. If we can get that move in the dollar, which I think we can, back up into that 170 area, then obviously this is going to be a little bit more of an inverse relationship. We want the dollar obviously to go higher because of that inverse relationship, but I think that this thing's got a really, really, really good chance, even though with some of the news that came out today that the ECB is not exactly going to just print money till the cows come home. I think we need to look at this and still focus around that 109 area for shorts with stops above. I'm going to take a look real quick also at the Japanese yen trade. Obviously this, and you know, the good news is we looked at this yen trade and kind of Custer's last stance for this on the support side was around 122.50. We've been staying away from going long the yen, and we talked about we'd have to have some new weekly profiles for support on this, and it's really kept me out of a lot of trouble looking at the profiles. And that was a long trade from 101.33 up to 124. So right now, it's kind of sitting on the sidelines on the yen still. We're going to talk about this wrap up, and we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We were finishing up with the Japanese yen. Not much left to talk about there, actually. Really need to wait until we see some new weekly profiles attempting to appear on this particular thing, and that's just not happening. It's red on the long term and the intermediate, and then we've got arrows down on our 240s and 60s. And what the cool thing is about the scanners, I was telling these guys at the Columbia Bank, I'm able to now at this stage really look at a pretty big matrix of all the colors and the stocks that I like to look at, and then some of the custom sorts, and are able to really just pinpoint exactly the type of setup that I like to see relative to the profiles, the numbers, the arrows, the colors. And I'm able to just, now that I've used this thing for as long as I have and developed all of it, it's something that's just super unique, and I feel like it gives you so much of an edge in a very concise way, being able to have more freedom because it saves a lot of time. I'm going to look at I'm going to look at the Canadian dollar really quick. Again, this is something we've been pounding the desk about, and let me see if our hotcom's working yet. Try it one more time here. I hate not being able to show these charts. All right, we're still kind of off on that one. Let me close this down. All right, so as we look at the Canadian dollar, this is one that we've just been completely staying long. I mean, it's just been something that's just been incredible. But as of today and yesterday, we talked about waiting patiently until we had a yellow bar appear and a new profile appear. And what I'm going to do is I'm going to look in my scanner, and this is kind of a historic situation as far as that goes. Had a new profile attempt to appear. Now it's locked in. Now we're in the balanced area. It's a relatively big balanced area, but that indication, that yellow peel back that happened, when I say yellow peel back, that yellow, hey, we're trying to start a new profile, that's a target situation you've got to pay attention to. And that happened yesterday. All right. So as we look at this, I'm just going to give some numbers here. As we look at this, we had those indications around 146. Then the market kind of fell apart here, and we're back down to actually 144.90, somewhere in that general area right now. So that indication was kind of, it's not time to go short. It's time to start taking some weight off. And that saved us 200 pips in the Canadian dollar right there, just by having that indication. Now, what do you do now? All right, so just going to give you some situations here. We've got huge daily profile, by the way, that's now locked in. Unfair highs, and this is incredible. Unfair highs 146.27. Unfair lows 141.27. So that's what 500 pips wide daily profile. Very abnormal. And you've got a POC at 145. So what does all this mean? This means that we could explore the entire fair auction down into that 141.27. But what do you do now? Right now, I'm going to go to the regulator of the trade, all right, the 240s, all right, and this little mechanism, you look at crude oil, you look at the S&Ps, whatever. Once you get the tide of the marketplace, either using breadth or just long-term trend profile techniques, you will a lot of times be able to use these 240s to regulate the trade up or down. And right now, we're at big time support on the 240s, which is 144.69. So the trend is still up. We've got a new profile in the long term that's appeared, but the 240s haven't broken down yet. All right. So that means that day traders still have a chance around this 144.69.70 to buy the Canadian dollar, which means you're hoping that the Canadian dollar becomes devalued and you're able to take advantage of something like that. If we break down below 144.69, all bets are off. Give yourself a little bit of noise, not to the tick on those numbers. You can be relatively stingy because we're at big time support on the Canadian dollar right now in the 240s. If we break down below here, you've got to wait for that 141.27. All right, that's the drill. It's real easy. I sound like it's like falling off a log. Trading is not easy, but these particular profiles and now these charts and these cells combined and the sorts within our scanner, in my opinion, and I'm able to show my chart now. Here's the scanner. Awesome. TFNN got this DIN back up, which is just sweet. We're going to look at the Canadian dollar. And what I was saying before, guys, and thanks for bearing with us, there's that big daily profile. It's locked in on the Canadian dollar, and those are the numbers, that 144.27 or whatever I said on the bottom of the profile on the 240 and 141.27. So there's the 144.69.70. And then next stop down, if that doesn't work, remember, if that doesn't work and we get down to, believe it or not, 141.27, we're still in a defined so-called uptrend, and that's the next support on the downside. So if we break down below that 240, you're going to be in no man's land for a while, and there's not going to be a lot of leverage. You're just going to have to sit and wait tight until we get back above the 144.69 or hit that 141.27. If I could say that again, I would get a gold star. Let's take a look at the ETF section for the U.S. Guys, if you're in the den, just throw the questions out there. I know this has been something we haven't been able to converse properly with. Let's take a look at our ETF profile grid, and I'm going into our daily here. All right. The other day we were looking at this XLE. I'm going to drill down into it since crude oil is just cratering. I mean, I want you guys to notice something. We talked about a lot of these stocks weren't making lower lows. They were actually making higher lows as crude oil continued to make lower lows. I think that means there's an opportunity in a lot of these stocks. We talked about COG, had a little pop on that one, was really, really cool. There's that daily. We actually talked about it yesterday, the day before. I can't remember that. But we talked about, higher lows in the stock, lower lows in crude oil, and actually breaking out above profiles and coming back and using that 16 general areas support. Man, what a cool little trade that happened there. And it's actually looking strong this morning. If we can get past our 240 unfair highs that are on 1734, and this has been a nice dollar pop actually more than a dollar pop in a stock like this, about a 5 or 6% move in one day. That's really cool. And if crude oil turns around north, this thing literally could go. EQT Corp, again, one that was on the radar screen. I want to show you this. This is, if you guys can see this is just ultra cool. This is our daily. We talked about being supportive. Scanner picked it out. I know we talked about it. I didn't dream this. And this is one, relative strength and relative sector strength. All right. So again, XLE stocks, should all be getting just decimated, and you got some ones that are showing their hand. I'm looking at our 60-minute turnover here. Look at this. A lot of greens shoots starting to happen. Crude oil's just sitting there on the all-time lows or recent all-time lows. There's some opportunities here, and more importantly, look at this 60-minute breadth that has crossed over. I mean, this hasn't happened in when? Let's just take a look at this. All right, we're going to come back after break, guys, and look at a couple more opportunities in the XLE.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Another stock, EQT, COG, SWN. We've been talking about SWN for a while, and this little puppy has just, I'm showing the E-signal chart right now, and I'm also showing the scanner. This has, really been one, and let me see if I got a couple of. By the way, you could set these charts up, multiple charts, and they're snapshot charts, but they're updating about every 60 to 100 seconds. That's the 6C. Let me get rid of that. And let's go down into, so again, I'm looking for stocks. I'm just looking at my colors. I'm looking at the numbers. I'm looking at the arrows. I've been talking about Phillips 66 too. I want to hit that, but SWN's been, this is just my God, I mean, this has just been one that's just saying, please buy me. Looking at crude oil, what it's done lately, and again, these charts, they're not the God's gift to the charting world. We put this in for visuals. We can't show prices. We'd be getting rid of exchange rules. And one of the things that was just incredible to some of these folks in South America is like, we can get real-time exchange derivatives on everything in the world for no charge. And I'm like, yes, you can. That's actually a big deal. And if you guys are used to getting free platforms and getting 15-minute delayed quotes and not being able to access the rest of the world, welcome to the world of the scanner. And SWN, look, we've used this weekly basing situation, these higher lows, lower lows in crude oil, higher lows in the stock. If we get above 752, I'm not looking at that as resistance. I'm looking at it if oil changes its tone at all. Remember, we want to try to find things that are going to be as least painful as possible if we're wrong. I don't want to just completely have the deepest convictions in the world. That usually gets me in trouble. But 752, a pop above there, this thing could see 13 bucks in a heartbeat. All right. So that's how I'm looking at Southwest. I want to take a look at Phillips 66 here really quick. And again, why did I look at this? Let's just figure that out first. I looked at this because I've got a bottom. I'm sitting at the bottom of weekly profile. I've got a little arrow up there, which means by definition that kind of has started broken stride on our daily, but within a new balanced area. I'm sitting at the bottom of a 240. So the reason I like this, and I'm just kind of looking at it like the matrix code. I like this setup, and I like it because, and here's our weekly. We've come down a little bit, but I mean, you look at this, look at the, since, what is this, January? I'm sorry, what is this, weekly? Yeah, okay, I'm sorry. Since, is that labeled right? Hold on. Yeah, this is our weekly. So we've kind of made higher highs. We're sitting at support here. Our daily, I'm okay with this too. We got some decent fences to lean against here to put stops and orient below on PSX. I like the way it acted in the last couple of days in the midst of all this crude oil situation. Guys, stops below maybe like 77 on this one. This thing could get a nice little ride back up into 86 in a heartbeat. Okay. No, can anyone hear me? Are we still okay on the volume? Everybody's okay? Cool. Okay. Okay, great. All right. Guys, you've been great. Put some of those things on your radar screen we talked about. At least monitor those things within the scanner. Let's make some points together. Stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.